Hi, this is John Malloy from Redwheel. I manage the global emerging market strategy out of Miami, as many of you know. A happy new year or belated new year. I think we're all glad to put 2023 behind us, 2022 behind us. And as we move to 23, I think we have a lot of things to look forward to. 22 was a difficult year. We were faced with war in Russia, Ukraine on the heels of Europe. That resulted in a commodity spike. We had oil trade well above $100. We also had an ADR clamp down in terms of Chinese ADRs, which caused a pretty massive contraction of that market early in the year. And then that was followed by basically an unprecedented Chinese lockdown around COVID. So given all of that and the fact that emerging markets were down with global markets, we would have assumed emerging markets to be down much more. They actually closed the year down around 20%. We underperformed that by about 400 basis points, largely due to Brazil and China. But with all those headwinds in terms of war, China, COVID, rate hikes, we think that emerging markets did well. And we think they're actually set up to do extremely well this year. And I think the markets are proving us right. As we speak today, our strategy is up almost 10% year to date, and the index is up over 8 or 9%. And so when we look at really where we are now, we think the drivers are China looking at opening up. They did pivot away from COVID, as you know, and Xi is focused on economic stability, common prosperity, opening the economy up, allowing people to travel freely. We're seeing that. We're seeing actually, the virus really move through herd immunity. At this point, there's 80 plus people who have already contracted the virus. So we are encouraged by that. We're also encouraged by some of the policies that the Chinese government have put in place to address, for example, real estate market. Yet they're still focused on growth. They're focused on growth in terms of consumption, broader consumption. They're also looking at renewables, energy transition. We're finding many themes in the portfolio that can benefit from energy transition. But also in terms of just stability going forward and continued economic development. And I think the big key that we see right now, and our advisors, Rice, Hadley, Gates, Manuel, pointed this out coming out of the party Congress meeting, is that the focus is not Taiwan. And we think that Taiwan is put on the back burner for some time. And for investors, obviously, that's a tremendous risk. And to think that that's kind of put off, we think that's positive. And even on a call that we had with our advisors last week, they thought that the U.S. administration was probably going to put the China-U.S. pressure on pause, at least for the next couple of years as we get through the next election. So that's quite positive. So we have China, second largest economy in the world, doing well. We also have central banks coming towards the end of an easy tightening policy, not only with the Fed, which is some ways off, but more importantly, countries like Brazil, Chile, South Africa, who have hiked rates really dramatically, over the past 1 year to 18 months. At some point, those rates are going to start to come down. So what was basically a headwind is now a tailwind, with rates coming down, with inflation rolling over. And then finally, the commodity complex. The commodity complex, as you know, is changing dramatically as the world looks at climate change and climate crisis. And many of those commodities that will do well, for example, copper, lithium, cobalt, nickel, and even the basic materials such as aluminum and steel, just because we need to build out infrastructure, those will benefit emerging markets disproportionately. And we think that is continues to be an interesting opportunity for us. Some of the themes that we have in terms of new material growth within copper, within lithium are very exciting. And so as we look at the start of the year, and as we look at 23 going forward, the key drivers are going to be China opening up, China recovery, commodities, continued commodity recovery globally, led by the green metals such as copper, such as lithium, and then the rate cycle, the fact that inflation has been rolling over globally, and we believe that central banks in emerging markets were ahead of the game, and at some point they will start to ease policy, and that should be very positive for emerging market equities. It will be positive for emerging market debt and currencies as well, but we think equities are set up to do extremely well. So with that, I'll leave it there. Thank you very much for your continued support.